Hello friends, James Stevenson back with part 19 in my Tesla earnings forecast video review series. I'm joined as always by my co-host Loki, who already ate his breakfast this morning during my filming of James and Loki's Gems of the Week, which is a subscriber exclusive weekly series in which I go through all the tweets that I liked on Twitter over the prior week and talk about them. A lot of people find that helpful because not everyone has the same Twitter experience. Even if you follow the same people, you see different tweets that the algorithm shows you. So I make one of those every week. It's usually about an hour-long episode. I'm actually uploading it right now to YouTube and Twitter simultaneously in the background. So I hope this video doesn't stop recording on me or flake out with me overtaxing my computer's processors. But I'll go ahead and share my desktop with you and show you right where we left off. If I scroll up just a little bit, here's what we covered in part 18, from the non-GAAP earnings down through the PE ratios and stock forecasting metrics through the adjusted EBITDA, gross margin percents and adjusted, etc. And we left off right here before we got to row 1257. This is where we see the total summarized production and delivery metrics that are in my forecast. I've got this lined up over the full year of 2023. You can also see the four most recently reported quarters in this view. I wanted to make the screen big enough that you would be able to read these numbers even if you're watching on a phone, but not so overwhelming that I'm showing you lots of the columns in my model. You know, you can see I have skipped columns C through T, and then there's, you know, 2 more years worth of forecast over here to the right that I'm not showing you. But it's in there. I think probably most people are most interested in what my forecast is for Q2, which you'll see in the Y column, but also what I have forecast for the remainder of this year. Column Z and AA have those. So let me scroll on down and show you these fresh rows we haven't talked about yet. I may try and cover a lot in this video in part 19 rather than break up this portion of the video into a bunch of short videos. Because there's not a lot to talk about for some of what's shown on these rows. They're here for a reason. I'm using them to make charts and stuff, but I don't necessarily have a lot to say about just what the totals are. So let's look at what this first row shows. This is the max weekly production capacity. Don't read too much into what this row is doing over time. This is just saying, hey, the factories are ramping up, so when you add up each of the models produced at each of the sites, as time goes by, those factories are capable of producing more vehicles. So a year ago this time, Tesla was able to produce a maximum of 40,000 vehicles, but they were only producing at a 50% production efficiency rate, because mostly the Shanghai Gigafactory was closed for lockdowns for 4 weeks and then running at limited capacity, only 1 shift per day, 6 days per week, for another 4 weeks. You can see the production efficiency went up quite a lot in Q3 and Q4. Here's what the Q1 number looked like. For Q2, I've got 77% production efficiency, which looks too high if you compare it versus these other quarters, and maybe it will end up being too high, but I think it's just a function of Berlin and Austin ramping up and Shanghai being able to actually get 12 weeks of production out in Q2. In Q1, they were really only able to do about 9 weeks of full production, so that accounts for this big increase. So that's how I get to my vehicle production total. 543,000, that's just adding up for every vehicle at every site in the top section. I'll go through that in a future video. That is stage 1 of my forecasting process, is to build up from a very detailed, granular level. I'm not just saying, hey, it's going to be 103,000 more vehicles. I'm going model by model, site by site, forecasting these things. Okay, what do I think the maximum possible production capacity is for any week in the quarter? How many weeks worth of production will this model get at this site? And then at what production efficiency are they going to be outputting vehicles? So that's how you get to production. The beginning inventory is just the prior quarter's ending inventory. That's true every quarter, which makes sense. The number that you had when you counted at the end of last quarter ought to be the same number that you had to start this quarter. Then for the ending finished goods inventory, this is how I get to the deliveries number, is I just figure, okay, how many of this vehicle produced from this site should there still be in finished goods inventory at the end of this quarter as Tesla unwinds the ramp. You can see the amount of ending finished goods inventory has been rising, and I'm forecasting that to continue through the rest of this year as Tesla does a better job of trying to deliver about an equal number of vehicles every month instead of having most of the deliveries happen in the last month of a quarter worldwide. That's a dumb way to plan out your logistics, because it makes your cost per delivery too high, and it's a bad utilization of your sales and delivery teams. So that's how you get to these deliveries. My delivery number is nearly 520,000. This number is way higher than what most people are expecting, but I don't forecast based on what other people are expecting. I build up from base assumptions by model and by site. I'm repeating myself a lot in this video, that add up to what I think the total deliveries are. And I'm not claiming that Tesla is going to have some huge advantage from delivering a bunch of vehicles they started the quarter with. Yes, it's good that Tesla had this many vehicles available to do some deliveries in April, rather than having every delivery center on Earth wait until halfway through the second month of the quarter before they have anything to deliver. That's a smarter way to run a business long term, because it lowers your cost per unit delivered, which is better for your profitability. But we'll see. I mean, a lot of people aren't even forecasting 500,000 deliveries this quarter. I think that's because a lot of them are reasoning by analogy, or some people are expecting there to be demand problems in this quarter, that Tesla's going to have difficulty selling the vehicles they produce. That isn't how I forecast. So maybe I'll be wrong by a lot, or maybe they'll be wrong by more than I am. We'll find out on July 2nd when Tesla reports the actual production and delivery numbers. And if you're curious what I have for deliveries subject to lease accounting, you can see that number has been rising over time. And that's what it's doing in my forecast as well, assuming that about the same percentage of the total deliveries become leased vehicle sales, where people are just renting the car essentially for 3 years and giving it back to Tesla for Tesla to sell as a used car to somebody else. Okay, what's this next section do? Beginning on row 1267, this is giving you the revenue before currency translation impact by type. So for every model, I've done this calculation already in stage 2 of my forecasting process, but here are just the sum of all those. If you add them up, where's most of the revenue coming from? Well, you got total automotive revenue, $25.4 billion is what's in my forecast. Nearly all of that is coming from the base configuration. A lot of people are only ordering the base configuration and no options. You see an awful lot of white Teslas on the roads because that is the free paint color. And it looks pretty good, right? That's not a bad looking vehicle. So that's where most of Tesla's automotive revenue comes from, the no options version. But then below that, I've got, okay, but there is revenue coming from people who are paying extra for a paint option or a performance package. excuse me, or wheels. You can get wheel upgrades optionally when you configure your Tesla. Different interior color for your upholstery. Full self-driving package. I've got this revenue rising as time goes by, and the features get better and more people want to buy full self-driving or upgrade to it on their Tesla that they already own. From the fleet, which now exceeds 4 million Teslas on the road worldwide. So that's how you get to cash buyer ASP. This is the way that I build up for each model at each site to how much revenue there is on the order configuration page for cash buyers who are ordering their Tesla. Then I have to make adjustments to get to automotive revenue per vehicle because there's some stuff that you don't see in the configurator. The first of those is that not all vehicles are cash sales. Some are leased, and in the case of those, the leased buyer isn't paying you the full price of the vehicle. Even over the 3 years that they're making payments, they're only giving you, 60% of the value of the vehicle or whatever. So you have to make a downward adjustment. There's a contra revenue here that takes away from this cash buyer ASP. Then there's a destination and delivery fee that may be mentioned in a footnote on the delivery page, but everybody has to pay destination and delivery fee, even if you pick up your car from the factory. That's not optional. Then there's regulatory credits, which have nothing to do with the buyer. Tesla just makes money when competitors buy Tesla's surplus EV credits that competitors need to buy because they didn't produce and sell enough electric vehicles to comply with applicable law. So this is just money transferred from Tesla's competitors to make Tesla more profitable. That's what regulatory credits are. It's a good business to be in if you can manage to be in it. People, Tesla haters were saying that this revenue was going to go away by 2022. And you can see this revenue has not gone away. One of the highest revenue quarters ever for Tesla was in the most recently reported quarter, over $500 million worth of regulatory credits revenue that falls straight to bottom line profit. And then other is everything else. So this is FSD deferred revenue being claimed as Tesla rolls out additional features that fulfill more of Tesla's initial obligation to perform that the buyer understood at the time they paid for FSD. Over-the-air upgrades, that could be for acceleration boosts or for full self-driving or what have you. Data plans, etc. So those are all in here, and that's how you get to the total revenue. Then if you exclude FSD and leasing and resale value guarantees and regulatory credits, how much revenue is there? That's a number I put together just for the benefit of Mayor Tucker, who asked me to put that number in here. So there it is. Then deliveries excluding those subject to lease accounting. So it's only 492,000 deliveries if you throw out the leased vehicles. Here's a metric, total automotive cost of sales dollars. So you've got that number here to compare against the total automotive revenue per delivery. No, these are revenue dollars. These are not per delivery. And neither are these. These are total dollars. So you can see those dollars rising. Forget the per delivery. I confused myself for a second. Then gross margin excluding FSD, leasing, etc. So that's using this number instead of this number for revenue. So if you throw some stuff out, what was the gross margin? And then here's the, what is this? This is 1280 minus 1278. This is just automotive revenue less regulatory credits. So I'm forecasting, I happen to be forecasting precisely $25 billion worth of revenue excluding regulatory credits, which I didn't even label over here, but I guess I should put that. Automotive revenue excluding reg credits. Okay. Let's keep going. So you can do the same thing for cost of sales dollars by type, which is what I've shown here. Probably I don't need to walk through everything that I just walked through because it's the same exact line items here. We're just talking about how much did it cost Tesla to produce those vehicles from its factories, including purchasing the raw materials, purchasing parts from suppliers, and paying the factory workers who put those vehicles together, and then the cost of shipping those vehicles to their buyers to be able to take delivery. Those are all the costs of sales. Then that gives you cost of sales percentage by type. So if you're curious to see what that looks like, there it is, or what's assumed in my forecast model. Anyway, of course, we never get confirmation on this level of detail from Tesla because they don't report numbers at this extreme level of detail. So I never get to find out how close my forecast was at a lot of the detailed level that I'm forecasting. And neither does Troy Teslike. So we can both cry into our beers that we're just left to ponder how our forecast was wrong because Tesla isn't telling us at a very detailed level that would help us improve our future forecasting accuracy by back propagating our forecast methodologies and calibrating. So the next couple of lines here, total revenue per delivery, total cost of sales per delivery, those are fun to use for charting or what have you. Revenue per fully diluted share, sometimes the haters will tell you that this number isn't going up. So you have to have the number calculated in your model to show them on a chart or in a table that they're wrong. Then there's the 12 trailing months of revenue per fully diluted share. That's here. You can see that number is rising, has been rising, and I'm projecting it to continue to rise. Here's the GAAP net income minus regulatory credits. So if you want to know what the profit is, the GAAP profit without the regulatory credits, that would be a very conservative way of looking at profit. But that profit metric is here for you if you're interested in it, what I'm forecasting. Then here I have total Tesla deliveries by site and model. So up top we saw the total for everything combined for production and deliveries. Here we're looking only at deliveries, and we're looking at it by site and by model the way that I forecast it. So we had a very low quarter historically for Model S and Model X. I think a lot of vehicles were in transit to buyers at the end of the quarter because Tesla was unwinding the wave. So I've got that returning to a little bit higher number than usual in Q2 for S and X because there was so much available to be delivered early in the quarter. Is the way to think about that, and then returning to a little bit more normal levels in Q3 and Q4 for that business. This is a pretty small business for Tesla now. Only about 10,000 of each of those delivered per quarter is what they've been averaging now for a while. Then from Fremont, where they're producing Model 3s, mostly for North American buyers, you've got 63,000 forecast, which is not crazy given what I think the Model 3 from Fremont deliveries were in Q4. For closed time periods, I just align to what Troy Teslike reports because he does a lot more legwork than I do trying to figure out exactly what the historicals were by site and by model. And then I just carry forward my forecast independent of what he's forecasting for future quarters. Fremont Model Y, you know, they're close to their design intent for output from that factory, so I don't have a larger number there than I think they produced and delivered in Q3 of last year. So that gets you to, you know, a little bit more in Q2 from Fremont than they delivered in Q3 of last year. What about from Shanghai? Well, they've been producing gangbusters and setting records for output from that factory, which is China. The China-Shanghai factory is Tesla's export hub, but it's also obviously supplying mainland China. So I've got a big deliveries number from Shanghai, Model 3s. This would be an all-time record by a lot, but consistent with the amount of output we've seen coming from that factory recently per week. If they can keep producing at that level and delivering a lot of those vehicles, then this makes sense to be an all-time record quarter for them. And for the Shanghai Model Y to be an all-time record. Remember, when you compare from Q1 to Q2, there were only 9 weeks of production from Shanghai in Q1. Probably you're going to get 12 weeks worth of production out of Q2. So just that by itself should be a 33% lift, which is less than what you're seeing here for both of these. Is it possible that these forecasts are too high? Sure. It's also possible that they're too low. We're going to find out again on July 2nd when Tesla reports. So that gives us the first quarter ever for total Shanghai deliveries to exceed 250,000, meaning that that factory is capable of producing more than 1 million vehicles per year. We kind of knew that already from looking at some of the monthly numbers they've been reporting now for a while, when they're able to get a full month worth of production out of that factory, which didn't happen in Q1. What about for Berlin? Well, we've got Model Ys coming out of Berlin, Model 3s maybe one day. I'm forecasting that to rise by, 11,000, almost 12,000, versus where it was in Q1 as this ramp continues higher from Berlin. Similarly, for Texas Model Ys, I've got their ramp doing a very similar thing as these factories come up together in tandem. And I'm forecasting that growth to continue some through the end of the year before it starts to level off near the end of the year. And the other vehicles being produced in North America are Cybertruck and Semi. I just classify those as Texas, even though Semi is being made in Nevada. I think they're going to move the production out of that Semi factory in Nevada at some point, and it'll become Texas from the main Tesla headquarters factory, Giga Austin. So here's what I have for Semi, and here's what I have for Cybertruck. 69 deliveries in Q3 is all I'm forecasting. Even if they deliver 0, I won't have missed by very much with that forecast. And then 2451 in Q4. So between the two of those, 2,500 Cybertrucks delivered in 2023, and then next year that should ramp up to a decent level. Where do I have this ramping to by the end of 2025? About 100,000 per quarter, so maybe you get 400,000 Cybertruck deliveries per year run rate by the end of 2025. I'm forecasting a pretty long ramp for that vehicle because it's a new platform. Tesla hasn't made a Cybertruck style vehicle before, so they may have some learning to do along the way to get that production ramp up to where they want it. And then for Semi, these numbers are a lot smaller and staying small for a long time because at some point they're going to have to move the entire operation, and that's not going to go quickly. So I don't want to way overshoot on Semi deliveries. Tesla isn't even reporting these deliveries yet because they're so immaterial. More news will come on Semi over the years, but expect a slow deliveries ramp is what I'm forecasting. And then below that, we've got totals by model. So the Model 3 and the Model Y are made at a bunch of locations across the planet. So if you want to see how those are ramping up by model, you can see that here. Model Y, Tesla's going to produce a lot of. The theory Brad Munkin has, Motorhead on Twitter, longtime Tesla hater and short seller, is that Tesla is foolish to produce 2 new factories to make the same model. The only flaw in his logic is that this is the best-selling luxury car in the world. That's why Tesla needs 2 new factories to build more of it. More people are transitioning to EVs every year. More people want to buy an EV, and this is the best-selling EV in the world. So that's why Tesla should be making more of those available every year, because more and more people are wanting to buy the best EV available, and that's what the Model Y is in most people's judgment. If you look just at the popularity contest that is global sales in 2022, Model Y was the best-selling EV worldwide. And that's probably a good place to end this video, and then I can talk about this other stuff in part 20, but for now we'll check back in with Loki, who is curled up and napping away his breakfast. And I'll outro and say if you've enjoyed today's video, don't forget to click the like button. If you're not subscribed to my channel, you can do that either on YouTube for free by clicking the subscribe button when you click the like button, or on Twitter. You can subscribe for 69 cents a week, $3 a month. That's a low price. That's like a penny per minute of exclusive video content that I make available to my Twitter subscribers or Patreon subscribers. That's another option for you if you prefer Patreon for some reason. And a special thank you, as always, to my executive producers, Kathy Kitchler and Rebellionaire.com, and I'll see you in the next one.